Morning, all of you. Good morning, children. Here I am, the Rani for counselor in commerce. I'll take management accounting papers. Okay. So today's paper is management accounting. So what is management? And here I'm sharing the screen. Okay, so children, accounting is itself said to be a part of accounting is said to be a language of business. Business entities are supposed to, the very objective of the purpose of business is to make profitability. In order to check their operations and their profitability, they do record their financial transactions and prepare some financial statements. And with the help of those financial statements, they'll come to know whether it is making a profit or losses. So it's like accounting in an accounting language, right? So which is said to be a business language. So this business accounting as a business language, we are going to discuss accounting, they keep the books of maintained in a systematic order for the day. Systematic order, daily financial transactions are recorded. We have learned. You learned in the accounting subject. I'm so sorry. I'll start again. So management accounting. The very in this topic, we are going to learn about management accounting, objectives and functions, importance, process of management accounting, tools and techniques, the differentiation between the management accounting, financial accounting, and cost accounting. Okay. So introduction, if you see, business keeps their transactions recorded for the purpose of knowing whether it is making a profit or loss, because the very objective of a business itself is making a profit. So to know whether they will, from their business operations, whether it's making a profit or loss, they will okay. So they are going to record the transactions for the transactions on a day-to-day basis at the particular year ending. These essence of these transactions are analyzed and summarized through some statements, and then come to know whether they made a profit or loss. This all process we used to call as an accounting, which is said to be a language of business, right? So these business enterprises, the performance or the position of business enterprises is gauged or analyzed through this accounting system. Okay. Whereas if you come into the account system, this accounting system, they basically classified into three types: financial accounting, cost accounting, management accounting. Financial accounting is the very business objective is to record the transactions on a day-to-day basis by and to ascertain the profitability of the business and financial position of the business at the end of the particular period of time, which is called accounting year. So it carries out general office business activities which are of a financial in nature, that records revenues, expenses, assets, and liabilities. Coming to the cost accounting. Cost accounting fulfills the needs of manufacturing companies. Okay, and the cost of goods are to the cost accounting. We come to know what is the cost of goods or services incurred and how they are supposed to be controlled. So the main objective of the cost accounting is to cost ascertainment and controlling the cost or reducing the cost. Okay, so that it can fix the selling price and provide information relating to the business. The next and the third branch of accounting is management accounting. Okay, this is a modern concept of accounting which is used by the management as a tool in decision making. The main objective of this management accounting is to take quality decisions so that they can improve the business operations. Okay, so that they can improve the business operations effectively and perform all their functions more efficiently. Now let us see about these management accounting in deeper, and under this subject we are going to learn the entire aspects of management accounting, theoretical aspect and the tools, the usage of various tools and how these tools are applied in the business by the business entities is what we are going to learn under the management accounting. So if you look into the meaning of the management accounting, any form of accounting which enables the management to conduct the business more efficiently, we call as the management accounting. Simple to say, it is an accounting information that helps the management in decision making, and so that performing its functions effectively and efficiently. So that perform its functions effectively and efficiently. Okay. Now, if you look into the definitions, various authors and various institutions has defined management accounting. Among that, ICAA of India, now it is calling as CMA, Cost and Management Accounting. Earlier, it used to be said to be Institute of Cost and Works Accountants of India. So it defined management accounting as a system of collection and presentation of relevant accounting information relating to an enterprise for planning, controlling, and decision making. Okay, it's given by ICAA of India, which is presently calling as CMA. Any form of accounting which enables a business to conduct more efficiently can be regarded as a management accounting. This was given by ICAA of England and Wales. Okay, and so the American accounting movements. The next one is objectives. If you look into the objective, policy formulation. First, the very objective of management accounting is to form the policies, effective policies that are required for the efficient performance of the business operations. Okay, so for that, whatever the information is required, that it provides. Then, by collecting and analyzing the cost volume and profit data, it provides the management, helps the management in decision making. So helping the management in decision making, controlling. When it uses certain tools of cost accounting also. So with the use of such cost accounting tools, it has the management in controlling the cost. Okay. And the next, delegation of motivating the personnel by delegating the authority and responsibility to the employees. It motivates the employees to find the alternatives and do their job more effectively. Yes. This management accounting also present its data in the form of charts, diagrams, and using of various statistical devices so that it can be understood easily. So interpretation of financial information in an easy manner. Next, financial reporting. It reports the necessary information through various sources by using various financial tools and techniques to the management so that the management can able to take the decisions by making comparative study. Yes. Management, the very objective of management accounting is to bring coordination among the various departments and activities involved in the organization so that objectives can be achieved easily and efficiently. Yes. If you look into the functions of management accounting, furnishing of relevant and vital data. What management accounting do? It furnishes the relevant and vital data. What is the relevant data? Means in order to take the decisions or in order to make future plannings, whatever is information required regarding stock or regarding cost, or by fixing the, at the time of fixing the selling price, what is the cost incurred so that what amount of price can be fixed, or what are the expected sales to reach the expected profit, okay, how the previous performance and how the past performance, what is its solvency ability, like that various, whatever information is required, the related information through the related data it provides. That is next, compilation of data in suitable form. Yes. See, if I want to know what is the long-term solvency of a company, while granting long-term loans, then the related information, suitable information that is required to analyze this long-term efficiency of a company, solvency of the company will be provided through financial statements. Okay. Similarly, if I want to know what is the turnover of various fixed assets of the company or various current assets of the company like debtors or creditors, that through by compiling the relevant data suitably in a suitable form, it provides the information. This is ability of the company in meeting its data or in meeting converting its sales into cash. Like that, it helps. Analysis and interpretation. Yes, the management accounting itself is analysis and interpretation of the provided data, so that enables the management to make the comparison and take the necessary accurate decisions. The next, means of communication and reporting. Whatever data it analyzes and interprets, that data is communicated to the top management in the form of a financial reports. This based upon these, I think this point has been repeated. Based upon these information communicated in the form of reporting, the management will do the planning and helps the management in judging the effective and efficient decision making. Now coming to the nature of management accounting. Yes, management accounting is both science and art. It is a science in terms of its implementation, art in terms of its implementation, both science and art, because it involves some techniques and tools. Only by use of those techniques and tools one can able to say the management accounting decisions use management accounting. Okay, various formulas and techniques it uses. That's why we say it as a science. Whereas it is also an art because involves the based on this by using of various tools and techniques, whatever the results outcome is there, using that outcome, taking wise decisions is an art of the managers. That's how it is both the science and art. Nature of information. Actually, the information provided by the management accounting is that providing necessary information, financial or accounting information to the management, so that different levels of the management at different through different sources. Like it collects the information from cost accounting, it collects the information from financial accounting. Next, special techniques. Yes, management accounting uses special techniques like comparative analysis, ratio analysis, budgetary control methods, standard costing methods, okay, trend analysis, like that. Different techniques it uses in order to analyze the financial statements. Future concern. The very objective of financial management accounting is that the very objective of financial management is management accounting is future concern. Means what the purpose of future, taking decisions for future or laying down future plans. The information that is provided by the management accounting helps the management in taking accurate decisions. Next, statutory obligation. Actually, in management accounting is voluntary. It's a voluntary process. There's no specific statutory requirements. Okay, organizations, as I said, it's a modern discipline that came into existence. Okay, maintenance of management accounting system in the organization is expensive. So, but still enables the management to work efficiently and effectively. So, many of the organizations implement this voluntarily on their own, but no specific argument. The next one is selective nature. Yes, selective nature, that is whatever the information it records and communicates, only relevant information that is required by the management for decision making, not everything. Whatever decisions management wants to take, related to that decisions, required information only collected and analyzed. Okay. The next one is cause and effect analysis. Yes. These studies, say for example, any deviations are there, any losses incurred apart from the scheduled standards or standards set apart, then it finds the reasons why there is a failure. What is the cause for the failure and how these can be corrected. That is what cause and effect analysis. Okay, the reasons behind the failure, the reasons behind the deviations are identified with the help of management accounting. Non-economic information. Yes, management accounting provides a non-economic information like whether a company is able to do, whether it is both, it considers both economical as well as non-economical information for decision making. Okay, so whether what is the liquidity position? Yes, company is highly liquid, company's solvency is good, or company's ability in turnover is very good. So like that, and decisions, whether efficiency working or not, the performance of the management is good or not. That non-economic information also can be provided with the providing is the management accounting. Not universal rules. Yes, in implementing the management accounting, what techniques to be used, what not to be used, how to use. There's no specific instructions because it is not a guided. It's not. There is no statutory obligation. So no universal rules. Whoever want whatever the technique, that technique will be implemented by them. Coming to the scope of management accounting, the management accounting generally is of takes the information from the financial accounting, it collects the information from the cost accounting, and also it involves budgeting and forecasting. Okay, what is budgeting means? In order to plan the business activities, it is important for the organization to forecast and budget the various functions of the organization. So that activity also comes under the management accounting. The next taxation is for the tax planning. Again, important area for the profitability of the concern. How maximum tax can be exempted or can be minimized. That also various tools and techniques it enables the organization. Next, Statistical method, yes, it involves it uses some certain statistical devices, I said, like tables, diagrams, graphs. Okay, so involve use of various statistical tools and techniques are also there here under the management accounting. This is for the effective control and decision making. Okay, interpretation of data. Again, the data of management accounting is interpreted, is analyzed and interpreted in such a way so that management can able to understand and take the decisions. Okay, that is how in such a simple way it interprets. After using the tools, it interprets the after analysis also interprets the result of the or outcome of the analysis. Reporting to management. Finally, the very objective of the management accounting itself is to report to the management. So it helps the management in taking decisions by reporting various financial statements. Coming to the importance and advantages, management accounting. Yes, whatever, if you look into the scope and objectives of the management accounting, easily we can say the management accounting enables the management in taking efficient, accurate decisions very efficiently and effectively. So it increases the, because it provides all the necessary information in a required format, time to time. Okay, that is how it enables the efficiency. The next, proper planning is when you are able to get when a management able to get the required information in a required format, automatically it helps them in making a future plans effectively. Next, when you have a proper planning with the proper information and relevant information, automatically it leads to maximization of profitability. Yes. Finally, when a management is provided with the required information and related information and can able to bring the comparisons with the information provided by management accounting through its reports, enables the management to make effective control over the deviations. Okay. So these deviations, how it controls? By improving the service, by improving its operations. Okay. The measurement of performance. Yes, this also enables the organization in order to measure the performance of various departments by establishing responsibilities and accountabilities so that it can minimize the deviations and can bring the control over various operations of the business. This all leads to reduction in business risk. Whatever the advantages, same way, management accounting also has some disadvantages that or limitations. The management accounting decisions are based on historical data, whatever the financial statements data is available or cost data is available. From that, analyzing that using various tools, it provides the information. So it is based on historical data. Intuitive decisions. Intuitive decisions means at the spot, based on the information provided, decisions are taken without sometimes without reference to the information and situation. Lack of objectivity, yes. It considers both qualitative and quantitative information for reporting purpose. Okay, so these may involve the bias of the management person involved in the analysis and interpretation of the data. Wide scope, it covers all the disciplines of the organization. Okay, so like from the qualitative and quantitative aspects, like monetary and non-monetary aspects. Okay, this all brings sometimes when the scope extends, when there is a wide scope, deviations may arise in getting accurate data. Only a tool, it's just used as a tool, but it cannot be based for the decision making is what? Expensive, yes. Establishment of a management accounting system in an organization involves expensive because it is a top level managerial function. So the It needs to pay higher remunerations and maintenance and high, if any wrong decision taken by this person may lead to the capital loss. That is the reason why it is expensive and it's very cautiously has to be implemented. Lack of statutory recognition. No statutory requirements there. So there is no standard systems. Lack of wide knowledge. Majority of the business entities, as I said, modern discipline of accounting is slowly is gathering. In spite of its limitations, what are the limitations? The advantages that management accounting providing leading the many organizations to adopt the management accounting system in their business entities. The next role of management accounting, identification, like it identifies the things that are to be required, like recognize and evaluate the transactions of various business, financial transactions of the business for appropriate accounting action. Then measurement, how do you quantify the required information into values or different quantifies the available information for decision making. Accumulation. What is accumulation? Consistent approach for recording and classifying the appropriate business transactions and economic data. Analysis. Management accounting involves analysis of the provided data. Whatever transactions are identified and measured, that data is analyzed for further detailed study and to take the accurate decisions. Definition and interpretation. The analyzed data is prepared and interpreted in a manner so that management can understand easily. The next one is communication. Whatever the data analyzed and interpreted will be communicated to the higher authorities in a proper way. Okay, communication to the top management so that this relevant data communicated through financial reports helps the top management in taking decisions. Studying. What is studying? Impact of expected business transactions and the economic events. It involves the study of the various business transactions and their impact on the business. Will be studied. Evaluation. Then it judges the implication of various decisions and it judges the implication of various decisions and transactions taking place in the business and finds the deviations. That helps the controlling. From that identification of deviations, after evaluation, whatever the deviations are identified will be tried to bring into control various through various tools and techniques. Assuring accountability. Yes. This all again involves, as I said, implementation of responsibility system in order to assure the accountability of each and every department and departmental heads. If you look into, as I said, accounting is a language of business, and there are three basic forms of accounting: financial accounting, cost accounting, and management accounting. So here we are learning about the as we are learning about management accounting. So let us see the relationship or the differentiation of management accounting with the financial accounting. Meaning aspect, if you see, financial accounting is a collection of it's a process which involves recording, summarizing, reporting the financial transactions of the firm in order to provide the financial position and performance of the organization. Whereas management accounting is simply analyzing and providing the information to the internal management for the purpose of financial decision making. Objective of the financial accounting is the very purpose of financial statements, whatever is that itself is the financial accounting object, that is enables the organization to find the performance of the organization at the end of the period and the financial position of the organization. Whereas management accounting objective is to help the management in formulating policies and plans. And next, coming to the nature, mainly historical data, it considers both historical data and also make the estimated figures for the future decisions. Subject matter, yes, it whatever the information provides relating to the entire organization. Management accounting is not like that. Only unit wise, department wise, product wise, like that also it can provide the information. Okay. The scope, yes. Financial accounting covers only financial information, financial transaction, revenues and expenses related information, whereas monetary, non-monetary events are recorded under the management accounting. Yes, there are for financial accounting, it is compulsory as per the law, whereas compulsory voluntarily report. Reporting to whom? Financial accounting data is reported to the external users. Management accounting data is for the internal users. Generally, financial accounting statements are prepared periodically, that is say 1 year, which is called accounting year, whereas managerial accounting is no period. As and when the management requires to take the decisions, required information, the relevant information is collected and analyzed, and based upon which they take the. So there is no specific period. Anytime they can do it. And what are the statements it submits? Financial accounting submits trading and profit and loss account, balance sheet, all type of statements. Whereas management accounting, no statements prepared, but data will be analyzed and various tools and techniques are used to analyze the data. The next one is the other form of accounting is cost accounting. So let us see the relationship or differentiation of management accounting from the cost accounting. Yes, cost accounting is related to the collection of cost, settlement of cost, and analysis of the cost information in order to find the deviations and bring the control. Whereas management accounting also same, okay. Whereas under cost accounting only quantitative aspects would say, in management accounting quantitative, qualitative aspects are included. That's the only small difference. Coming to the objective, the cost accounting objective is to ascertain the cost and control the cost, whereas the management accounting objective is for the effective and efficient management of decision making. Okay. Orientation, actually cost accounting considers both past data and future data. Okay, sorry, present data, whereas the management accounting also considers the future orientation for the future purpose. Okay, scope, cost accounting scope is limited and narrow, whereas management accounting is cost accounting is for the short-term planning, like but now what is the cost incurred and what is the, what are the deviations, how it can be controlled over a period of time. Because the management accounting decisions for a long period of time, whatever the decisions are taken by the management, the person, with the help of the information provided by management accounting, generally for a long period of time. Cost accounting provides cost and cost control techniques. It uses standard costing, budget control, margin costing, CP and costing. Whereas management accounting uses ratio analysis, fund flow, comparative studies, statistical analysis, along with the cost accounting techniques also. Cost accounting for certain business entities, the cost accounting is required to be implemented, like manufacturing units and all. If you have, if a company is into manufacturing business, compulsorily those industries are supposed to maintain cost accounting. But management accounting is voluntary, no specific requirements of the management. Tools and techniques. Financial funds flow, financial statement analysis, which involves fund flow statement, cash flow statement, cost ratio analysis, marginal costing, management information system, budgeting control. So this is about our first block. Okay, I hope I made you all the basic information of management accounting understand. Now the next block, we have financial statements and financial statement and financial types of financial statements An analysis of financial statements. Once again, I'll present screen of financial statements. Yes, yes, Shiran. We learned the very purpose of the accounting as a language of business. In presence is all data means accounting statement. Financial statements speak about the business. Financial statements speak of the business means what? Through the financial statements like income statement, balance sheet, one can understand whether how the company is performing and what is its financial position, right? So here under this we are going to learn about the importance of financial statements, objectives, identify the users, recognize the limitations. Okay. If you look into the meaning, financial statements are written records. You already learned about this. It's only the introduction of financial statements. These are written records that convey the very business activities and financial performance of a company. Through the records, like profit and loss account or the balance sheet or cash flow, if you see, you'll be able to know how the company performed, what is the cash inflow and outflow during a period for that company. All this we can understand. Coming to the types, so these are the types generally: income statement, balance sheet, statement of changes in equity, and statement of cash. Yes, income statement, we know. It's not coming. Income statement, like the balance sheet, is the one of the financial statement through which the financial position of the company, we can say it consists of equities, liabilities, and assets. On the left hand part of the balance sheet, on left hand part of the balance sheet, we show equity and liabilities. Right hand part we show assets. Okay. This generally so actually assets are equals to liability and equity. Liabilities are those after outside external borrowings. Equity is the internal borrowing, that is funds raised by the owner, right? The next one is balance sheet, income statement, which includes indirect trading account, indirect expenses, okay, trading and profit and loss account, through which performance of business operations of a company can be analyzed. The next one is cash flow statement. Cash flow statement tells about the cash inflow from various activities of the business and outflows from various activities of the business. Finally, the net cash flow can be analyzed. So actually, as per the Companies Act, financial statements in relation to company are supposed to be balance sheet, profit and loss account, changes in equity, and statement of cash flow. Children, earlier only balance sheet, profit and loss account used to be there, but as per the amended Companies Act 2013, it is made compulsory for every company to present changes in equity and cash flow statements. So objectives are this, because why any organization prepares financial statements. Generally, financial statements are prepared by any organization with an object of providing economic data and financial data of a company, so that it enables people interested in that to understand how a company is performing and what is its financial position. So it also provides the sufficient and reliable information for various users of the accounting information. Okay. Next one is, yes, whatever the information it generally, whatever the data provided through its financial statements, they is subject to be fair view of the business, because it is certified by the auditor. Okay, it serves as a basis for future operations. Based on this financial data, we can the management can go for future operations. After the users, here we said that the objective is to provide the information to the various parties, right? Sufficient and reliable information to the various parties. Who are those parties who wants to know about the financial information of a company? Generally, the users of financial statements are classified into two types: internal users and external users. Under the internal users, we can come into a management group like a board of directors, investors, shareholders of the company, okay, managers, officers, employees, all these people come under the management group or internal users. Under the external users, again, you have two types: financing group and public group. Under the financing group, you have investors, lenders, suppliers, and public group, government agencies, employees, customers, and others. Let us know about these, each of them. How do they need the financial information? This is the new topic which you are learning, so I'm explaining here. Please do follow. Management group, like board of directors, in order to take the decisions and make future plans, management people wants the data, financial data of a company, based on which the future plans and decisions are made. Partners or the shareholders. The existing shareholders or potential shareholders comes under the partners. These people would like to know what existing shareholders means. They want to know what upon their investment in the form of shares, how much returns they are getting on that year from that particular company. They want to know. Potential shareholder, whether to invest in that company, he wants to go through the financial statements of a company over a period of time, and based on that, he will take the necessary decision to invest or not to invest in that company. Next one is managers. Again, managers at their level need the information relating to the business while implementing the policies and decisions. Officers also say. Employees, I said one more person. Employees are the people who get motivated while taking the decisions to know about the salaries, the payment of salaries, payment of bonus. Based on the company performance only, any company will declare the bonus, right, or incentives. So, to know about the bonus or incentives that the company is going to declare, employees also will look into the financial statements of company. Now, coming to the external users, we have financing group and public group. The financing group are those like investors, lenders, and suppliers. Financing group is the people who finance the company, means who lend funds to the company. Investors, if you said, like a prospective investors in the form of shares, to know whether to invest or not to invest. How do they take the decision? Based on the performance of company and financial position of the company. Lenders, like the people who fund financial assistance, who give financial assistance, like banks and financial institutions. Based on the solvency of a company, they decide solvency and liquidity of the company. They decide whether to lend or not to lend. Okay. The next, suppliers. Suppliers of raw materials or the materials, products, whatever. It is also for a credit basis. While offering the goods on credit basis, in order to take the decisions regarding the goods, they would like to know how the company is going to perform, what is the ability in repayment of its debts. That way suppliers wants to know. Now coming to the public group, we have government agencies, employees, okay, the employees are can take under the internal reserve. Okay, customers and others. Government agencies like income tax authorities and all to know what is the performance of company, how much amount of tax can be. Like industry-wise performance, in order to analyze the industry-wise performance and to declare the industrial policies or subsidies, government also wants to know the financial information of various business entities comes under different industries. The next one is already told you customers. As a customer, you may not, madam, why customer is required? Because customers also interested in knowing the ability of a company, because he expects a quality of product from the company. So based on its performance and availability of funds, only a company can able to provide a quality product. So that to know about that, a customer will prefer. Others like social groups. Social groups wants to know how eco-friendly company is doing its business. What sort of expenses is spending, what sort of cost it is getting. All these information materials it's using. We get from the financial statements. Limitations, yes, these financial statements. Then, madam, everyone is getting the required information as what they required through financial statements. But then, why management accounting and financial statement analysis? You may get a doubt, right? So that is that all your doubts will be cleared here with the help of these limitations of financial statements. First one is historical in nature. The financial statements are historical in their nature because they collect based on the previous data. Past data means after, at the end of the year, whatever the transactions have taken place in the organization during the year, based on that it prepares the statements and that reflects the performance and the position of the company. As on the date, immediately for the future, the present will not be reflected. Overall profitability, it reveals overall profitability. Overall, the company as a whole, how the company performed, its functions is what are generally explained. Okay. Next, fraud and window dressing. Yes, financial statements are more to bias of the managers or accountants. Fixed period financial statement means only for a particular period these financial statement provide the information. It will not cover the non-financial aspects. It will not consider the intangible assets. And the audit concerns are there. According to the audit, they will. That is how it comes the window dressing. Okay, future prediction. It will not allow future prediction. Compatibility, individual statements now. So compatibility, individual you can make. Personal bias, possibility of personal bias. These are the limitations of a financial statement analysis. So in order to overcome these limitations of financial statement analysis, business entities go for management accounting system, which involves analysis of financial statements further. Whatever the information provided in the financial statements, analyzing them further for further decision making and implementation. Like so, it uses like a historical analysis, vertical analysis, ratio analysis, graphical analysis, trend analysis, regression analysis. These are the basic only things. So we here for the academic purpose for our 6th semester under the management accounting as per curriculum, we are going to learn about this. What is comparative financial statement analysis, common size statement, trend analysis, ratio analysis, fund flow, cash flow. We are going to learn about these financial statements as per our curriculum here under this subject. Okay. Okay. So I thought of explain you today even how to prepare the comparative statement. Right, sorry children, it's a time up. In tomorrow's next class, I'm going to explain you how to prepare these financial statements. How to prepare the financial statements. Like not prepare the financial analysis of financial statements. Analysis of financial statements we will do. Okay. Under that comparative analysis, common size analysis. In tomorrow's class, I'll explain you comparative and common size analysis. How do we do that? After comparative and common size, we go to the ratio analysis or funds flow. I'll take funds flow. So next class, we are going to discuss comparative and common size, also fund flow statement. Children, I request you all to be ready with your material, study material that is sent by wherever you, and notes, stationery, calculators. Okay? Please be ready with your study material, because I'm going to solve the questions that are given in our study material only. Notes to write the solutions, calculator for calculations. Okay. Thank you, children. Thank you for being part of this class. If you have any doubts, you can raise your hands. You can text in the chat box. Yes? Do you have any doubts? I hope I made you all understand the concept of management accounting and the financial statement analysis. Why companies go for financial statement management accounting, implementation of management accounting in their books, and what is financial statement analysis, and how this financial statement analysis is made using the financial statements information. Thank you. Any doubts? Tomorrow, again, I'm repeating, tomorrow I'm starting problems with comparative statement, common size statement, both income statement and a balance sheet you will get. After that, fund flow statement. Okay. Ratio analysis, one class, cash flow statement, one class it takes. So tomorrow's class, we can cover these three. So please do join without missing. Thank you. Anyone else? Any more doubts? Thank you, sir.